Hello everyone, welcome back to All Financial Discussion channel. For this video, I'd like to continue the discussion on building up your retirement fund. This video, I'm going to target someone who is around 55 to 60 years old. There are actually two portions for today's discussion. The first portion, I'm going to discuss which value stock to invest in order to be able to achieve a monthly dividend income. So this will be the first objective. My next objective, I will suggest the growth stock that is able to beat the inflation. So all these two will be the objective of this video. This table here shows you the different SG dividend payout at different months. Okay, but over here you probably can see that not 100% SG dividend. Okay, because over this month, for example, January, I can't find any good SG dividend payout at January. So therefore, in order to compensate, okay, I actually have US dividend stock, Coca-Cola, Johnson & Johnson, and P&G. Besides January, and also another month will be July. Okay, July again, I can't find any good SG dividend payout. So therefore, I actually compensate with US dividend stock. Let me discuss on this slide here. So over here, you can see that in order to receive persistent money payout from the different dividend, okay, basically these are the companies that you can actually invest so as to ensure that you are able to receive a consistent money payout. So as I mentioned earlier on, January, I can't really find a good Singapore dividend stock. So therefore, I compensate with US dividend stock like Coca-Cola, Johnson & Johnson, and P&G. SGX, you can see that I actually put in between January and February, okay, because they can be either or, but honestly, most of the time will be at February. And another stock will be at February will be Keppel Infrastructure. So again, Keppel REITs is in between February and March, but most of the time it will be at March. During March, you can see that you potentially can have 4 dividend payout from 4 different companies. CICT, Ascendus, Keppel REITs, and Mapletrees Logistics. April, there is only one company payout, which is DBS. Again, you can see that DBS pay up another dividend quickly during the May. So during the May, it is probably the most company that I can receive based on my recommendation of SG dividends. So over here, you can see that during the May, potentially, I may have 3 Singapore biggest bank that actually offer my dividends, and also SGX, ST Engineering, and Semcor Industry. And also during the June, I actually have Mapletrees and ST Engineering. This is my suggestion, okay, because I know that during July, there is potentially so-called no SG dividend payout. So therefore, you can consider to save your May and June so that you have enough money at the July. Okay, so basically this is my suggestion. If not, like I mentioned earlier on, I actually incorporate so-called US dividend stock so that you can so-called guarantee to receive every month a dividend payout. Next, in terms of August, is also consider a very heavy dividend payout from many, many different companies. In fact, you can see that most of the company that I actually recommend, they actually concentrate on the August and September payout. So over here, you can say that probably most of them actually offer a dividend during the August and September. Again, this money you can save it up for the October and November. Okay, as you can see that during the October and November, it's only one company. For example, in the October, SGX Exchange, November, DBS. Last but not least, during the December, I actually has 2 company, which is ST Engineering and Mapletrees Logistics. Keep this in mind. ST Engineering actually offer a very low dividend payout. So therefore, for during December, I will look forward for the Mapletrees Logistics. So this is how I actually strategize my value stock so as to ensure that every month I will be able to receive at least one dividend payout. And if not, okay, you can actually save. For example, for this case here, during the May and the June, you can actually save for you to tide over the July. As I mentioned, July, there is no Singapore dividend stocks here. And again, during the August and September, you can actually save up for the October, November, December, and also the January one. Okay, so basically this is how I actually so-called assign my dividend stocks at a money payout. So next, okay, I'm going to go through a very important topics. I'm going to discuss why people cannot retire in Singapore. It becomes very stressful if you are not able to retire in Singapore. Okay, so to be very frank, in fact, I have received some emails from my viewer that suggest that they probably had a hard time on retirement. So next, I'm going to suggest at least what you can do so that you can retire comfortably. This is my suggestion, but in fact, I know that some of you guys actually have been practicing this. Okay, so some people in Singapore, they in fact rent up their Singapore home and then they actually move to JB where it is cheaper. And because of this, they actually save the difference in terms of the cost. Let me quote you a very simple example. Let's say your Singapore apartment, okay, you are able to rent it out for $4,000. Let's say that you have not fully paid up your apartment, okay, you need to pay $1,000 for your mortgage. So basically, the net income from this rental will be $3,000 per month. Okay, so this $3,000 per month, in fact, if you move to JB and if you rent a very nice condo, okay, it is between ringgit 2,500 to 4,500. So basically, if you convert this into Singapore dollar, which is around 750 to 1,350 Singapore dollar. So basically, and you can visualize that your living costs can be in fact lower, okay, to 30 or even 60%. So with this, okay, there is a strong possibility that you are going to have this money surplus that can actually tahan for your living costs in Malaysia or JB to be more specific. Next, I'm going to discuss what are the things that you need to check for before you actually execute this move. For example, if you plan to rent out your HDB flat, okay, so you need to follow the HDB rules when you actually rent your flats or maybe even just the rooms. So the key issue is, firstly, you must meet the minimum occupancy period, MOP, before you can actually rent out the whole flat. Okay, so basically, if not, you can only just rent rooms rather than the whole flat. Next, you need to seek approval, and the number of people that can actually stay at your rented house is basically capped. So next will be for condo and private property. So in fact, it is much more easier when you actually so-called rent your condo or private property. Okay, so firstly is the minimum lease term rules. Okay, so basically there is no short terms. Okay, so basically you cannot add like A, B, and B. So next, okay, you also need to check with your MCST. Okay, but most of the time, okay, you can actually rent out your condo or your private property. So one thing that you need to keep in mind is on the tax. Okay, so basically rental income in Singapore is in fact taxable, and you also have the property tax. Okay, so basically if you are living in Malaysia long enough, okay, you need to think about the tax residency implication. Next, I'm going to suggest what will be your consideration when you actually so-called move to JB. The first criteria will be your visa or long stay. So you need to check different options. For example, like the Malaysia My Second Home, MM2H. Okay, or maybe you also need to check your social or long-term visa pathway. So in fact, for Malaysia, the rules probably may change. So you need to verify the latest rules. Next, commuting. Okay, so if you still plan to work in Singapore, the Johor Singapore Causeway, they can be quite jialat at peak hour. So basically, you need to keep this in mind. So if possible, if your work actually allow you to be remote or at least hybrid, okay, so therefore with this actually make this strategize much better. Next, in terms of healthcare and insurance, okay, so most likely you probably will keep your SG coverage. Maybe you can consider to add your Malaysia coverage. This actually depends on how much time you actually spend in Malaysia. So let me come to the common setup people actually use For example, okay, people actually rent up their SG home, okay, in a 12 or 24-month basis. Okay, so rent your Malaysia property. Don't buy initially because you may not like the place or you cannot get used. So therefore, for me, I strongly suggest that you rent, test it out, okay, for 6 to 12 months in order to test your lifestyle, whether you are suitable to this lifestyle or not. Then you can think of buy later on. So this in fact work best if your SG place is already paid down or has positive cash flow. As I highlight earlier on, okay, with this positive cash flow, this can be your so-called your daily expenditure. Next, if your work allow you to be remote, okay, if not, you are semi-retired or you have some flexibility in terms of working. Last but not least, if you are comfortable when you actually cross the border or living abroad. So basically, these are the practical JB consideration before you actually move your house from Singapore to JB. I'm going to discuss which part of Malaysia should you retire. Earlier on, I mentioned about JB. Okay, so besides JB, in fact, I have 3 more recommendations. The first one will be Penang. Okay, so the second one will be JB. The third one will be Ipoh. And last but not least, KL, which is quite similar with Singapore. Let's come to Penang first. Okay, so why Penang is in fact the best overall for many retirees. Why? Okay, because Penang is known for food, healthcare, expat community, and workability. So the pro will be they have excellent private hospital and strong expat scene, great food and also culture, and easy airport access. Coming to the negative part, okay, so in fact this can be more expensive as compared to the most of Malaysia, and the traffic, okay, which is the car traffic, they can be quite annoying. So the typical comfortable budget will be between ringgit 6K to 12K per month so that you can retire quite comfortable. So this is in fact the topic for most people. Second will be Johor Bahru. Okay, so this will be in fact best if you still want to have access to Singapore. Coming to the pro, as I mentioned that Johor Bahru is probably the closest to Singapore. And in fact, this place is very familiar to many Singaporeans. You can have strong healthcare and modern condos. So this will be an easy weekend trip back to Singapore if you want. Coming to the cons, this can be a big issue. Traffic at the border, at the causeway, and it is also less retirement viable because it is more urban as compared to the rest of the part of Malaysia. Coming to the budget, okay, you typically require about ringgit 5K to 10K per month in order for you to retire comfortably. So this will be best if your family or friend or maybe you still need to work in Singapore. So this is the second part of Malaysia, Johor Bahru. Third will be Ipoh. Okay, so in fact, this will be the best value, which means that you need the lowest for you to retire. So Ipoh is known for a quiet life and also lower cost. So coming to the pro, okay, so as I mentioned that they are in fact much cheaper as compared to the rest that I actually introduced. They are also cooler in terms of temperature as compared to KL. So typically you can see that they are actually slower pace. Coming to the cons, okay, so basically you can see that there are smaller expat scene, okay, which means that you are going to have less international. So basically this is the con of Ipoh. Coming to the budget, okay, you probably just need around ringgit 4K to 8K per month in order for you to retire comfortably in Ipoh. So in fact, for Ipoh, okay, it is known as a great hidden gem because you have a lot of good food. And basically from this picture, you can see that time actually moved back. Okay, for example, in Singapore, this is something that actually looked like in the 1970s or 1980s. So this is third part of Malaysia, Ipoh. My last part of Malaysia recommendation will be KL. Okay, so in fact, KL is quite similar with Singapore. Okay, so basically for KL, they have the best city lifestyle. So they are known for lots of malls, lots of hospital, a lot of convenience. So the pro is you have the best hospital, you have big city, you have lots to do. Coming to the negative side of staying in KL will be traffic. Okay, so most of the time the traffic is chaos. The traffic is almost a standstill. So if you want to travel around in KL, you probably will take their MRT. They are also more expensive and more noisy. So you need to have a budget between 7K in ringgit or 15K in ringgit per month so that you are able to retire comfortably in KL. This is my plan. Okay, so in fact, earlier on, I have shortlist 4 places: JB, Penang, Ipoh, and KL. So this is my suggestion. Okay, so firstly, you actually rent 3 months in JB. Why? Because JB is closest to Singapore. So you are going to have the easiest transition. You're going to try this first, whether you like it or not, whether you can get used or not. So after that, you can consider to move 1 month in Penang. Okay, so basically Penang allow you to have a true retirement lifestyle. So when you are actually around 60, which you don't need a lot of medical care, you can afford to stay further away from Singapore. So therefore, I suggest you go to Penang. After that, you can even try on Ipoh. Okay, so this Ipoh, in fact, will maximize your saving. As for KL, okay, so they are actually similar with Singapore. So after that, probably when I'm near 70s, then I will consider to move back to Singapore to have the healthcare attention. So this is my suggestion. Firstly, go to JB, try whether you like the place. After that, you can consider to move to Penang or Ipoh, and then you can have a stay there roughly about 6 or 7 years. After that, when you are actually near to 70, you can consider to move back to SG. So basically, this is my plan. Okay, when you actually have shortage of money for your retirement, you can consider this move so that you can still comfortably retire in Singapore and also maybe in Malaysia. Let's come back to the focus of this video. Okay, so this video, I'm going to discuss your portion of investment. Let's say you are actually at the age of 55 to 60 years old. So this is actually my recommendation. I suggest that you put 25% onto growth stocks and 75% onto value stock. This is because when you are actually at this age, in fact, you are actually very near to the retirement. So therefore, I suggest that you focus onto the value stock so that you can generate a source of passive income using the dividend payout. Let's take a closer look on the growth stock first. Let's concentrate on the growth stock for someone who is between 55 to 60 years old. I will allocate 25%. How I actually allocate, there will be 4 tiers. Okay, so definitely at this age, I will not allocate to crypto. As I mentioned earlier on, crypto in fact is one of the most risk asset investment. So therefore at this age, which is pretty close to retirement, I will not recommend crypto investment. So next, I will recommend to put 5% onto the risky growth stock. So this is in fact to beat the inflation. So therefore, I will try a little bit on the risky growth stock. Next, on the conventional growth stock, I will allocate 10%. Last but not least, on the very, very safe ETF types of growth stock, again, I will also allocate 10%. Let's go into more detail. Which specific growth stock should I invest? A quick disclaimer. I am not a licensed financial advice. This video is for entertainment and education purpose only and should not be considered financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you are willing to lose. With this, let's continue the discussion. But before, I would like to urge you guys to help me by like this video. When more of you guys actually help me to like this video will have a better chances to reach out to a larger audience. So guys, help me press the like button now. For those who are new to this channel, and if you have learned something from this video, hope you can support me by subscribing to this channel and turn on your notification bell. Once again, thank you so much for your strong support. Let's come to the risky growth stock, 5%. Okay, so if you have followed my video quite closely, you know that under this risky growth stock, there are actually three tiers. One is actually the moonshot. Okay, so basically that one probably can crash close to zero. Okay, so the next one will be under the speculative tech. Next will be the next generation disruptor. As you can see that at this age, close to 60, I strongly recommend you to put onto the next gen disruptor. In fact, to the Magnificent 7 Tesla, 5%. Okay, because Tesla, in fact, have diversified their business. Not only they just concentrate on EV, they are also into the AI, into the robotics. So therefore, this is my suggestion, 5% onto Tesla. Next, on the convention growth stock, okay, so I actually allocate 10%. As you can see from here, I can't actually put 2.5% onto each so-called AI or tech leader. So for me, okay, I am in fact more confident in these two companies. So therefore, I will allocate 5% onto NVIDIA, 5% onto Microsoft. Okay, but you definitely can choose either one. So this is actually my suggestion on the convention growth stock. Coming into my last category of growth stock, the very, very safe type, like ETF type. Okay, so for me, in fact, if you want, you can actually allocate 10% onto Invesco QQQ. Okay, so but if not, you can also allocate like what I suggest, 5% onto Vanguard Growth ETF and another 5% onto Invesco QQQ. But like I mentioned earlier on, no matter how you actually place, this is in fact a very safe growth stock. After going through the growth stock, so now I like to focus on the value stock. I always like to emphasize this for Singapore. In fact, there are many, many good choice of value stock. So for me, I will only invest Singapore value stock. So again, how I actually allocate my value stock, this will be as following. Okay, so I have total 75% onto the value stock. I will redistribute 30% onto bank, 30% onto Singapore REITs, and last but not least, I will emphasize on the defensive stock just in case any so-called unusual event. For example, currently, okay, the Middle East conflict, okay, so they will be much more safer as compared to the rest. Why I actually specifically select the banks and REITs? Because these two categories, they move in different direction with interest rate. So for example, when interest rate increase, bank will benefit. So when interest rate actually reduce, risk will benefit. So basically, in short, you can see that these two categories, they actually complement each other. And I add in the defensive to robust my trade selection on the value stocks. Let's come into more detail, okay, on the value stock that I actually allocate. Singapore banks 30%. So this is how I actually allocate, okay, with respect to the biggest three Singapore bank. I will allocate 15% onto DBS, 10% onto OCBC, and 5% onto UOB. So basically, this table here shows you the dividend yield and also the payout style, and in fact, also the key strength. So from here, you can see that I definitely trust the DBS brand. So therefore, I actually allocate more onto DBS band, 15%. Next will be Singapore REITs, okay, also 30%. Why I also concentrate on Singapore REITs is because from here you can see that for REITs, okay, in fact, they have a better dividend yield as compared to Singapore banks. Okay, so therefore, I actually also recommend 30% onto Singapore REITs. So how I actually allocate on the specific so-called stocks. Capital Land Integrate Commercial Trust, 10%. Maple Trees Logistics, 5%. Keppel DC REITs, 5%. Fraser Centrepoint Trust, 5%. Ascendus REITs, 5%. So basically from here, you can see that they actually, in fact, quite a decent dividend payout for Singapore REITs. And also the payout style and also the key strength of this Singapore REITs. Coming to my last categories, which is the defensive type, how I actually allocate my fund. Okay, so I will allocate 5% onto Keppel Infrastructure Trust, 5% onto Sembcorp Industry, and this 2.5% each to the defensive stock like ST Engineering and Singapore Exchange. So over here, you can see that how I actually allocate my value stock. Okay, so I will allocate 30% onto Singapore banks with DBS, OCBC, and UOB, the allocation as shown over here. Next, in Singapore REITs, okay, so I will mainly concentrate on CapitaLand Integrated Commercial Trust with 10% and the rest with 5%. And last but not least, under the defensive, okay, so basically you can see from here, this Keppel Infrastructure Trust, in fact, has the highest dividend yield. So therefore, at this age, it is always very attractive to find a very safe and dividend yield, which is the Keppel Infrastructure Trust. Next, these three, in fact, act like a defensive. So from here, you can see that this is how I actually build up my retirement fund for the value stock. With this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.